Well, thank you very much, Madam Chair. Merci beaucoup. Honorable members of the Economic and Monetary Affairs Committees, ladies and gentlemen, it really gives me great pleasure to come back before you. This is, as you have said, Chair, my first reporting meeting with you committee, and I certainly very much welcome a chance to report on my last 4 weeks. So don't expect that I'm breaking ground yet, because I'm very much going through a learning curve, and an accelerated one, where I'm indeed trying to learn German, but I'm also trying to learn central bank language in order to not disappoint some of those who believe that any word is actually charged with 100 years of monetary policy determination. So bear with me, show a little bit of patience, don't overinterpret, if I may say. I will have my way of also addressing some of the key issues that have to do with monetary policy. As you have indicated, Madam Chair, the dialogue between the European Parliament, and particularly you committee, and the ECB is, in my view, extremely important and a very valuable tool in order to be able to actually understand some of the issues that we all Europeans are struggling with, and for us to explain how our mission is delivered upon. As I was telling you earlier on, a very moving moment for me in the last few days was the moment when I actually signed my first euro banknote. And I only measured the importance of it after having heard Jean-Claude Trichet remind me that it is an important moment, when I received from friends and family members the request that they see that euro banknote as quickly as possible. And it really determines and identifies very clearly the vivid imperative upon us to be the custodian of the euro. And as you know, in the euro area, the support for the euro and its credibility has increased. It has risen from a low of 62% in 2013 at the time of the crisis to an all-time high of 76% today. Trust in the custodians of the euro, that is the ECB, has also grown up, but certainly not in the same magnitude as it has for the euro. It's been less dynamic. My predecessors at the ECB were very attentive to that and already acted to address this challenge. The ECB's accountability practices have evolved, as has its communication strategy. And the ECB's transparency, ethics, and good governance frameworks have been harmonized, strengthened, and extended to all members of the Governing Council and Supervisory Board. But it is important for me that our focus on connecting with the people of the euro area, those we serve, continues and grows much stronger, in particular by improving the way in which we communicate with the general public. And this is why your role as members of the European Parliament, as members of this committee, is, in my view, so important. You make sure that people's voice is heard by the ECB and that the ECB's voice is heard by the people. Communication, to me, is a two-way street, and it is vitally important for democracy, which is a founding principle of Europe. And it is in that spirit that I will approach this hearing and all those that I'm looking forward to having with you over the course of the next few years. So let me start by looking first at the current economic situation in the euro area, which you, Chair, have alluded to in your opening remarks, and then I will turn to the key two questions that you asked me to comment upon. Euro area growth remains weak, with gross domestic product growing by only 0.2% quarter on quarter in the third quarter of 2019. And this weakness has been mainly due to global factors. The world economic outlook remains sluggish and uncertain, and this in turn lowers demand for euro area goods and services, and it also affects business sentiment and investment. As the sector most directly exposed to these global developments, the manufacturing industry has been suffering the most. And we are also seeing signs of spillovers to other parts of the economy, with recent survey data pointing to some moderation in the service sector. Yet in spite of that, the consumption has held up fairly well. Labor market conditions have continued to improve, encouraging consumers to remain confident and continue to spend. But that has been the most vibrant part of our economy. The prolonged slowdown in economic activity has nevertheless been affecting price developments, which remain subdued. And you know that's an important matter for us. According to Eurostat's flash estimate, inflation stood at 1% in November. And whether we look at surveys or market-based measures, inflation expectations are at or close to historical lows. So what can the ECB do in a weaker environment to fulfill its price stability mandate? Well, first of all, monetary policy can respond effectively even when growth is being dampened by external factors. And it can do so by ensuring favorable financing conditions for all sectors of the economy and providing visibility on those conditions into the future. Backed by a steady flow of credit on affordable terms, both households and firms can consume, can invest more. Such support for internal demand reinforces in particular the service sector, which of course is the most labor-intensive in our economy. And that in turn helps to protect jobs and incomes and thereby sustain consumption, partly offsetting what I referred to earlier, which is the external shock. We are seeing this mechanism in action today. The relative resilience of services so far is the key reason why employment has been very little affected by the global manufacturing slowdown. In response to the weaker outlook, the Governing Council of the ECB took a series of decisions in December this year to ensure that financing conditions remained favorable. As you will remember, because my predecessor, President Draghi, reported to you on September 23rd, the Governing Council at the time decided a package that comprised lowering the interest rate on the deposit facility. So the deposit facility rate was reduced to minus 0.5%. The second item in the package was to restart the net asset purchases. The third item in the package was to strengthen forward guidance on both tools, the interest rates and the purchase program. The fourth was to make the conditions on the targeted long-term refinancing operations, the way in which the economy is financed through a special financing program that is made available to banks, to make that more attractive. And the fifth item was to introduce a new regime of remuneration for excess reserves that are held by banks within the euro system. And these measures are intended to work together to keep interest rates at all maturities around levels that are consistent with very accommodative financing conditions. The ECB's negative policy rates and forward guidance on their likely future path influence short to medium-term interest rates, which are used by banks to price their loans to corporate. In parallel, the net purchase of bonds eases medium to long-term yields, which provides the benchmark for long-term loans that are generally made available to households. The more attractive conditions available under the TLTRO, which is called the TLTRO3, help keeps bank credit flowing to customers at affordable terms. And there was a clear focus on all sectors but the housing sector. At the same time, the Governing Council's decision in September showed that it was alert and attentive to the potential side effects of monetary policy. This new two-tier, that's how it's called, it's a two-tier regime of excess reserve remuneration. Actually, it exempts a share of banks' liquidity deposited with the euro system from the negative rates applied on the deposit facility. And this will also ensure that banks remain willing and able to pass on very accommodative financing conditions to the economy at large. The ECB's accommodative policy stance has been a key driver of domestic demand during the recovery, and that stance remains in place. As laid out in the ECB's forward guidance, monetary policy will continue to support the economy and respond to future risks in line with our price stability mandate. And we will obviously continuously monitor the side effects of our policies. Now, as I confirmed to you last time when I was here, the ECB remains determined to deliver on its commitment to comply with its mandate. This commitment is vital for the stability of the euro area economy and for the welfare of euro area citizens. But you have also asked me to discuss two key issues of, in my view, structural nature that our monetary policy is now facing. And in particular, you've asked me to touch on the ECB's monetary policy strategy. That monetary policy strategy review will start in the near future. As you probably know, a monetary policy strategy is not something that is unheard of. It's actually an exercise that is conducted by many central banks around the world at different rhythm and at a different pace depending on those banks. The Fed in the United States is currently going through that exercise. It will most likely complete the exercise that has started about a year ago in the second half of 2020. The Central Bank of Canada is conducting those strategic review every 5 years to make sure that it is on track with delivering on its mandate. In our case, the ECB has last conducted its strategy review in 2003. That's 16 years ago. And in those 16 years, many things have happened. The macroeconomic landscape has been marked by the great financial crisis in 2008, and then the sovereign debt crisis that triggered here in Europe in 2011. More recently, that landscape has been affected by low inflation pretty much around the world, and certainly in the advanced economies. And at the same time, new challenges are taking place, from demographic changes, aging of societies, predominantly in the advanced economies, but also massive technological changes and breakthrough, especially when they're compounded. And climate change has finally reached the mainstream debate and is hitting the screen of everyone who is interested in the future and has policy responsibilities. Finally, conventional wisdom that used to apply has been challenged, and monetary policy globally has had to explore uncharted territories. So this really calls on us to review our strategy and to consider how our monetary policy can best deliver on its mandate. And indeed, a question that is common to the entire community of central banks today, and that is being explored by others at the moment, is how to best define the medium-term objective of monetary policy so as to ensure that expectations are firmly anchored. This could be particularly beneficial in conditions like today's, in which the policy space to buffer the economy from adverse developments is more limited than it was prior to the crisis. And we are all trying to get a better understanding of how the longer-term trends I mentioned earlier might actually affect variables we monitor regularly and try to control. Now, this being said, it would be premature and it would be counterproductive, in my view, at this point in time, for me to sort of settle on what the strategic review will be, because the whole point of the exercise is precisely to, first of all, include the entire Governing Council in the framing of that strategic review, and to open avenues for dialogue with all those who are interested in the matter. That includes experts, and you just mentioned that you are also consulting with experts. That includes, first and foremost, you, as the conduit for the views that you hear from your constituencies. And that two-way street communication that I very much believe in will really find its place in that strategic review. How, where, at what speed, at what pace, during what sequence of the exercise is something that I would certainly welcome your views on, but that I'm not going to have a definite resolution about, because it's for the Governing Council to also be part and parcel of that initial exercise of framing the way in which we conduct the strategic review. Third, civil society representatives will also need to have a conduit, and I welcome very much their views in relation to monetary policy and how we can deliver on our mandate. I can assure you, though, that two principles will apply: thorough analysis and an open mind. This will require time for reflection and for wide consideration, including the stakeholders that I have just mentioned. I was informed by my predecessors that in the past, in 2003, the Parliament, and this committee in particular, have offered a unique forum for dialogue, which has been enriched by the expert reports that, some of which were prepared ahead of this hearing. The ECB greatly benefited from this debate 16 years ago when it undertook its strategic review. This time around, given that communication is much more vibrant, given that the tools of communication can certainly open the field in a much broader way, I'm sure that there will be even more vibrant exchange and an enriched dialogue between us on these matters. But I certainly see it as my responsibility as the ECB President to report back to you and to engage in further discussions. As I said, once the Governing Council of the ECB has identified the framework within which we need to review our strategy. The second topic on which you've asked me to discuss today is what we call the future of money. Indeed, as central banks navigate a complex and changing landscape, we should not only aim to anticipate future trends, but we should also try to shape them. And in doing so, we should be particularly attentive to risks and make sure that we perform a thorough analysis of the cost and benefit. The financial services environment is evolving as new entrants shake up the markets and disrupt it. Public demands is there. The ongoing discussion around so-called stable coins offers a glimpse of the changes that are yet to come. This phenomenon could disrupt the current payment landscape with spillover effects for monetary policy transmission, financial stability, and the international monetary system more broadly. But I can assure you that the ECB is not standing still. Last year, I remember when I was last with you for this nomination hearing, I did mention TIPS to ensure that you all knew about TIPS, and I had just learned about TIPS. Well, I know a little more now. So TIPS is Target Instant Payment Settlement. And it's not surprising that actually we didn't know about it so much. It's because it happens very much behind the scene. It happens between banks to make sure that there is instant payments between banks on a 24-hour basis, 7 days a week and 365 days a year. So it happens behind the scene, but it allows for the instant payment between them. And it certainly responds to the growing user demands for instant payments and help ensure that bank account holders in Europe can be reached and can actually transact. So by offering settlement in central bank money, TIPS increases the speed and safety of customers' daily transactions. Is it yet well spread throughout the banking system? Not yet, because clearly some of them had developed their own system. But we very much hope that it will be more broadly used and disseminated in order to facilitate transactions and make them safer. Second area, since 2016, the ECB has also been exploring the application of new technologies, particularly the famous DLT, distributed ledger technologies, to market infrastructure. Together with the Bank of Japan, the ECB is conducting a research project called Stella, which is investigating innovations that can facilitate safer, faster, and cheaper financial transactions. But driving change also means identifying and managing the risks that come with breaking new grounds. Innovations, including stablecoins, will only be beneficial if the associated risks are mitigated through effective regulations, that's where you come into place, and oversight. So I believe that we should follow the golden rule of supervision in that matter. Same business, same risks, same rules, no matter what the window dressing is, no matter what the technology implies. We must ensure that stablecoins do not compromise the safety and efficiency of the payment system or the soundness and stability of financial and monetary system. And this is all the more important for stablecoins with a global reach. The G7 working group, chaired by my fellow executive board, Benoît Cœuré, has made clear recommendations with a view to developing a globally consistent approach to their regulation and oversight. As it did for the General Data Protection Regulation, the famous GDPR, I believe that the European Union can show the way here. In line with international standards and recommendations, we, and of course you are co-legislators in that respect, should develop and enforce regulation that strikes the right balance between innovation on the one hand and risks on the other hand, supporting innovation but addressing, being mindful and cautious about the risks. The ECB is ready to play its part and is already collaborating with other central banks and international authorities to that end. We are also reviewing our oversight framework to capture innovative payment solutions, including stablecoins arrangements, and in doing so, we are following a risk-based and proportionate approach. Looking ahead, the ECB will continue to act as a catalyst for change. We will go on engaging European shareholders to actively contribute to a pan-European payment solution. We also play our part in full independence in assessing the value of central bank digital currencies for European citizens and the broader economy. A central bank digital currency would allow citizens to use central bank money in their daily transactions. However, depending on its design, a central bank digital currency could pose risks. For instance, they could alter the way in which monetary policy is conducted and transmitted in the real economy. They could also carry implications for the functioning of the global financial system and its stability. So the question of central bank digital currencies and their optimal design certainly warrants further analysis. Our ultimate goal is to foster safer, innovative, and integrated payment in euro. This will in turn benefit everyone in the euro area, and it will strengthen the euro internationally as well. So, Madam Chair, honourable members of the ECON Committee, the last Parliament elections that you went through highlighted clearly that people expect ambitious responses from Europe. Matching these expectations by working together is the best way to strengthen people's confidence in the European project, the euro and the ECB. Jean Monnet once said, everyone is ambitious. The question is if one is ambitious to be or ambitious to do. And certainly at the ECB, we are ambitious to do, and to do so jointly with others whenever that is possible. I thank you very much for your attention.